Hi, greetings. We're just quickly going to look at a trial balance. So we need to prepare the post-adjustment trial balance for June 2025. So it's very important to note that we are going to provide you with a pre-adjustment trial balance. You then have to use that pre-adjustment trial balance to prepare the post-adjustment trial balance. In other words, your pre-adjustment trial balance does not include any of the year-end adjustments. You have to know that, unless obviously we tell you that we have already included some of the amounts. So you're always going to, first of all, start with your balances as per the pre-adjustment trial balance, because these are the amounts that you have recorded throughout your financial year. And that is why you must start with these amounts, because you need to get to the final trial balance, so the final amounts, the correct amounts. And that's why we are doing these adjustments, because we recorded all of our transactions throughout the financial year. We did certain reconciliations, but then at year end, we found that we maybe missed some transactions, or we just have to now record and post our year-end adjustments. So the adjustments that we don't do throughout the year, like for instance, your depreciation. So you need to know that your accumulated depreciation, for instance, that account, that is your opening balance, because that is a year-end adjustment, meaning that that is an account that will only be recorded and posted at year end. So you definitely have to know that that is your opening balance, unless stated otherwise. Right. So your first step is to start with your balances as per your pre-adjustment trial balance. So you will get an answer sheet. The answer sheet might already have some of the amounts, but then you have to go and indicate what is not there yet. So your capital, you are starting on 1245490. Then for your drawings, you are starting on 21,500. Your land and buildings, 1 million. Vehicles, they've already told us, okay, that's your vehicles. That's the final amount. So we will not do anything there. Accumulated is starting on 290. Trading stock, they were nice. They already told me that started on 50,000. Bank on 120,000. Debtors control on 30,000. Moving on. Fixed deposit, final balance is 800,000. Then I have some open spaces, so I'm probably going to have to add some accounts. Then moving down, sales, cost of sales. Commission income is already there. And then we have insurance that's there, as well as rent income. Water and electricity, cleaning materials, interest on fixed deposit, and that is it. So we have all of the pre-adjustment trial balance amounts in our trial balance. Then we move on to the adjustments and information. So the accountant omitted, in other words, the accountant did not record a cash sales transaction from the accounting records. Goods with a cost price of 5,000 Rand was sold for 9,000 Rand. So first of all, always go back to, if something has been omitted, I need to now record this. So I need to understand my transaction. So what do we do with a cash sale? We say that we have more money in the bank, and bank is an asset. Assets increase on the debit side. Why do we have more money? Because of the sale. So your sales account also needs to increase. And remember, sales increase on the credit side. Then I know that I cannot have sales without trading stock leaving my business in the form of a cost of sales expense. So I have more cost of sales expense, less trading stock. So then I go to my trial balance and I'm going to say that my bank now has to increase by the selling price because I received the money, right? Why did I receive the money? Because of a sales transaction. I know that I cannot have sales without having more cost of sales, so plus cost of sales, because that is the trading stock that's leaving my business. So I don't have that trading stock anymore. Next transaction, the business obtained a new loan. Okay, so a new loan. This 20,000 Rand was deposited directly into the business's bank account. This transaction must be recorded. In other words, we received the loan, but the accountant didn't record the new loan. So we have received the money in our bank account, so plus 20,000 Rand in bank, and then you now have a new account loan. Usually we give you the bank's name, so you will just enter the bank's name. And this loan is a liability, so credit 20,000 Rand. Then a stock take at year end revealed that you had trading stock and cleaning materials. This was after taking into account all adjustments. In other words, after we now after we gave this customer his trading stock that he purchased, we counted our stock and we found that our stock amounted to 51,200. So you have to remember that in your financial statements, you must reflect the trading stock balance as per the physical count, because that is the most accurate figure that you have for trading stock. Because I can say that I have 100,000 Rands trading stock. I can say that in my financial statements, but do I really have that? Can I verify that amount? So I want to show accurate financial figures. I don't want to overstate or understate my assets. Therefore, I must always show in trading stock the physical stock counted. So step number one is I'm going to calculate, according to my books, what am I currently reflecting as trading stock? And in my book, I'm showing that I have 45,000 Rands trading stock. But now, with the physical stock count, it revealed that I actually have 51,200. So I physically have more, a lot more for that matter, than what I thought I had. So I need to now adjust my books to reflect what I physically have. So I need to find the difference between the two. And that difference is 6,200. So I need to add to the balance that I have now 6,200 in order for my trading stock to get to the 51,200. But I know that I cannot have what we refer to as a one-leg journal. Remember, you're walking with your two legs, so two things happening. And that means that I now need to have a credit 6,200 somewhere because I've now debited trading stock. So if I am in a situation where I physically counted more stock than what I thought I had in my records, it means that I have a trading stock surplus. So I'll go to my nominal section because this is an income account, and I will say trading stock surplus credit. Okay, so it's an income. Then cleaning materials. So throughout the financial year, I've now recorded all of my cleaning material purchases. But then at year end, I saw that I didn't use all of my cleaning materials. And cleaning materials is an expense. Then the matching principle says that I may only include income and expenses in my nominal section for income and expenses actually incurred or generated. So I can only incur an expense if I made use of that expense in the current year. So yes, I've purchased 2,000 rands cleaning materials, but I haven't yet used all of it. Therefore, I cannot include the 150 rand in my current financial year as an expense because I haven't used it. So I'm going to reclassify that as a current asset. And I'm going to say that this is now my consumable stores on hand. And it is an asset, 150 rand. So I'm debiting the asset and I'm crediting the expense to say that it actually wasn't an expense in this financial year. Right. Then provide for outstanding interest on the fixed deposit. Interest is not capitalized. So meaning that I need to receive whatever interest I earned on this fixed deposit. Whatever interest I earned on this fixed deposit, I must receive it in the current year. If I have received more than what I should have received, I have an income received in advance. If I received less than I should have received, I have an accrued income. They didn't give me the fixed deposit amount. They didn't give me the interest at which, the rate at which interest is calculated. So that means that I need to go to my pre-adjustment trial balance to find those details. And there we have it. Fixed deposit 15% at 800,000 Rand. So you now need to calculate how much was I supposed to receive. So I'm going to do my calculation here at the bottom. Because remember, you have to show all of your calculations on your answer sheet. Otherwise, I will not mark it. Where is it? Yeah. Okay. So I'm going to say that I'm going to do a calculation here. Obviously, if I use the asterisk now for interest on fixed deposit, I cannot use the asterisk again for something else because my teacher is not going to go and guess where I made what calculations. So if you're going to make another one, then you can use maybe like a circle or triangle, or you can use a numbering system as well. Okay, so 800,000 Rand is my fixed deposit. I'm earning interest at 15% per annum. And they didn't say that the fixed deposit changed throughout the year. So it was 800,000 Rand at 15% for the full financial year. There we go, 120,000. So that is the amount that I should have received, 120,000. Now I'm doubting whether I remember that correctly because it's early morning. Yes, 120,000. We have recorded only 100,000. So can you see that there's a 20,000 Rand difference? So 20,000 Rand that we have not yet recorded, which means that we haven't yet received that amount. So you need to go and add your 20,000 for you to reflect an income of 120,000 Rand. But you haven't yet received that amount. So it is an accrued amount, accrued income. It's still due to you. And that is an asset. So I'm debiting the asset and I'm crediting the income account. And yes, I'm keeping it in a bracket now because I don't know if I maybe have other accrued income adjustments. So I don't want to now say this is my final amount. Okay, moving on. The credit balance of a debtor must be transferred to his account in the creditor's ledger. So let's quickly look at what is the situation here. You have a debtor, right? So debtors control. Remember, when you are doing your calculations, it's fine to abbreviate. Just don't abbreviate in your actual T accounts because then you will not get your marks. Okay, so the credit balance of a debtor. So this debtor has a balance currently of 200 Rand, but it is a credit balance of 200 Rand. This must now be transferred to his account in the creditor's ledger. In other words, I don't want a balance for him in my debtor's control, so I will need to debit debtor's control to get rid of that credit. And I want to rather reflect him as a creditor because I don't want debtors with credit balances. So I need to debit my debtors control to get rid of that negative. And then I need to credit my creditors control. I do not yet have creditors control, so I'm adding creditors control, 200 Rand. Okay, nice and easy one. Commission for March has already been received and recorded. In other words, included in my commission income in my trial balance is commission that I received for March. In other words, that I received in advance because my financial year ended Feb. So I need to remove the amount that I received for March. They then said here that the commission remained constant throughout the financial year. In other words, every month I received the same amount of commission. So 101,400 represents 13 months. So divided by 13 to see what was the commission on a monthly basis, and that was 7,800. Okay, I'm now saying that one of these 7,800s is actually for March. So I need to remove it from my current year. So I'm debiting that income account to remove it. And then I have to credit the account income received in advance. Once again, keeping it in brackets for now. Right. Then write off the 500 Rand account of an insolvent debtor. In other words, I'm removing this debtor. He no longer owes me the amount. It has now become a bad debt. Bad debt, 500. Can you see I'm keeping all of them in brackets for now, just so that I don't start scratching out and doing a bunch of nonsense there. Okay. Depreciation on vehicles is calculated at 20% per annum according to the diminishing balance method. In other words, I'm calculating depreciation on the carrying value. On the carrying value. Carrying value is cost minus accumulated depreciation on day one. So that's your first step. When it's diminishing balance, calculate your carrying value, taking your cost minus your accumulated depreciation on day one. Okay, so it's your 500,000 minus your 290 that you will now use to calculate your depreciation. So then you're going to times by 20%. And you're going to do that for the full financial year because they didn't say that you purchase any new vehicles during the year. They didn't say that this specific vehicle was purchased during the year. So you assume that you had this vehicle for the full financial year, therefore 42,000 Rand. 42,000 Rand. Please remember, yes, it is strange. I'm saying times 12 over 12. We all know that's 1. But remember, I told you that this is because there might be adjustments where they tell you, listen here, one of your vehicles, you didn't own that for the full financial year because you only purchased that vehicle during the year. And then we tend to forget to add this, how many months did I own this asset during the current financial year? But in this case, they didn't say anything about any vehicles that we purchased during the year. Okay, so I'm debiting my depreciation expense account, what am I typing here? Depreciation account. And I'm saying that it is 42,000 Rand. I only own the one type of asset, so I'm not going to include depreciation on equipment. So therefore, the 42 is my final amount. And then I credit my accumulated depreciation on vehicles. Let me just add that accumulated on vehicles. Remember, you must state specifically what that account is. And then you must remember that your trial balance is not done unless you have your totals in the debit and credit columns. Without that, we're not going to mark it because then you only showed me calculations. Then I will give you the marks for the calculations, and that is it. So 332, ooh, frack, what am I writing here? 330. Oh, brain is not functioning. It's too early in the morning and it is too cold. There we go. Then your bank started on 120, then you added another 29,000, so 149. With your debtors, you started on 30,000 and then you added 200 Rand to that because of that data that you reclassified as a creditor, and then you wrote off bad debts. There we go. Then your accrued income is an asset that is due to you. Credits is controller liability. Income received in advance a liability, because remember, the income received in advance, you still need to do something in order for you to actually earn that money. Then your sales has a credit balance, 659. And then we have our cost of sales. And then our commission income, 101,400 minus 7,800 income account. So credit side. Rent income is another income, so credit side. Insurance is an expense, so debit, as well as water and electricity, and then bad debts. So once again, last step, you're not done until you have all of the amounts in debit and credit side, meaning that you must now add all of the amounts on your debit side and write the total, and all of the amounts on your credit side, and you write the total, and then you should balance. If you don't balance, it's because you debited something that should have been credited, or what has happened in the past is that mistakes were made when setting the paper, so it can't balance, or it could be that they purposefully decided not to make this trial balance, but then it would have not balanced since the get-go, because they want to test to see if you are now going to start doing random stuff to try and balance this account of this trial balance. But this one should balance because it balanced on the question paper, unless the question paper was wrong. So 42. And there we have our debit side total. So let's see. Come on, there we go. And I write the total there. I hope I didn't make typos now because I was talking whilst typing. And sometimes the two don't work well together. And then we have 8,000 on 659. And then 93,600 and 81,600 plus 120 plus 6,200. So let's see, what do we have here? Come on. And there we go. It is balancing. So we are happy. We didn't make any mistakes, no typos, all is well. So that is a trial balance.